We'll start off where Brian kind of left off this in Salesforce. With the successful transmission that Brian did, I can go over to my NetSuite environment. Now, in your NetSuite environment, you can have a decision point at this junction of the integration. Do you need to approve the order even though it's closed one in Salesforce, or do you need that additional control gate? That's some things that you want to think about when records are passed into NetSuite, is whether or not you do need that extra control gate. In my scenario, I didn't put that additional control gate in there. I had it pre-approved as it comes into NetSuite. So his is within one of my 21 in my sales orders. So I'll just pull up his sales order. So this sales order is already approved. NetSuite's telling my AR team that the sales order is pending billing. You can see I have the identical customer that we both share and his product to NetSuite items. So one of the flows that it's important between the two systems to have is if you're selling one thing out of one system, you want to make sure that the product is also in your ERP system. I have way more information than Brian about this product from an accounting standpoint. I have the income account that this will hit in the end, and other important kind of ERP and specific attributes from an accounting standpoint. I can also see by the sales order his quantity rate and the term of which these licenses will cover. So this will cover the term between February to January to 2022. In my simple example here, I do not have a billing schedule, but you could attach one in NetSuite to let the system know that perhaps I'm billing on a quarterly basis, so 1/4 over a period of time, semi-annually, or some custom schedule that you might have to let the system know it's okay to bill. In my scenario here, I'm just going to invoice the entire amount up front and let my AR team take over. So I can bill the remaining amount here, and it's going to transform this sales order into a NetSuite invoice. For those new to NetSuite, a sales order is a non-posting transaction, so there is no GL impact at that point in time. All my information is brought over from the sales order. So my AR team or whoever my group is invoicing, they don't really need to add any additional information unless you have something specific that you want to add to the invoice that may not be resident on the sales order. So I now have an invoice that is created from this sales order. So there's a nice little tie. So you have a nice little trail of your transactions. Most importantly, this has a GL impact, and we can quickly look at that for the accounts as I'm controller. It's debiting my AR, but as you can see, it's also crediting not my revenue account, but it's actually deferred this amount because I have advanced revenue management in my NetSuite system. It knows that this is a software licensed product that I need to defer the revenue in its entirety until service is rendered. So we can go and look a little deeper in that. But from the invoice standpoint, I can print a copy and also email a PDF version to my customers for viewing right away. You can do bulk processes that do mass mailing on a day-to-day, or you can be part of your mail out, and you can mail it right out of NetSuite and control the threading there. So if your client responds, you'll see that threading in there as long as they continue replying to that email. There are important things to think about. Perhaps you want to, in your integration, to think about return trip data. You might want to bring over the invoice number so that when the invoice is created and billed, you might want to bring that little bit of information back to Salesforce, or even provide this URL back so that perhaps someone in Salesforce can view the invoice, maybe allow them to print a copy, maybe give them a view only so that they not be able to edit it, or just know that there's an invoice 248 sitting in my ERP system, or when your sales team is discussing with the client, he or she also has a visibility that there's an existence of this invoice that's attached to that one order over on Salesforce. So things to consider. I think Jeff mentioned it earlier about looking at your field mapping, deciding who is going to be the master or the source of truth, deciding whether it's going to be unidirectional, and also things that are happening on a return trip basis. So my AR team can go and accept payments, and they can do their functions normally. If I go back to my sales order, we're going to have a look closer at it. It's now told me that I'm billed, which is correct. Invoice is out, and my AR team's doing their thing. But I'm going to switch my hats. I'm going to jump in as a revenue manager role, and I can go and say, okay, we have this new sold deal. I want to see what's happening with the revenue recognition and my deferral of this license. So with advanced revenue management, NetSuite creates an additional record during this time when the sales order is approved called a revenue arrangement. And I'll open that into another window so I can kind of see both. Revenue arrangement is a separate transactional record, best to kind of view it almost like a contract of your obligations with your client. So it has your customer. It allows me to look at revenue elements that are within this arrangement. So I have this customer, this product coming from this order. It gives me all my information that came over from the order, the revenue recognition rule that was attached to the item, which tells the system, how am I going to recognize the revenue? When do I recognize the revenue? And on what action? This simple 12-month rule is just going off of my start date of my engagement. And it, as the name says, it's just going off of a 12-month term, effectively just taking my total amount, dividing it by period, 1/12 each period that I can recognize as I progress through their contract. If you have more complex scenarios where you're doing software, hardware, support bundling, NetSuite is 606 compliant, and you can create those bundles in NetSuite, put fair value in, and NetSuite will do a two-step recognition, initial recognition, and then it will do a reclass. Now, I'm going to update my revenue plans as my revenue manager role. I want to see, what does this contract look like going into the future?
And Larry, we had a quick question related to where you just were. The question, will sales orders generated through Salesforce automatically pull in sales tax when applicable? And will sales tax be included in Salesforce or only in NetSuite?
Okay, good question. Another integration talk, if you have Avalara running, best practice is always to have them running on both sides, so that if you are sending customer facing artifacts out of Salesforce and NetSuite, that they're calculating the same taxes. This scenario here I have is non-taxable, but I could also run the NetSuite tax engine against here. It would book the liability, and it would be on the order itself. If I go here, you can see that I have no tax total, and normally I would have either a tax code based on the shipping address of my customer. But you'd want NetSuite to calculate its own taxes in either way. That's why the shared Avalara account is very common. We're seeing in a lot of NetSuite to Salesforce to NetSuite customers. They'll have one Avatax instance where both are feeding into, or both are calculating themselves, so that you don't have that discrepancy. Now, as revenue manager, I can say, okay, I want to look at my plans. The revenue plans represent the schedule, or what you might be putting in normally in your Excel to say, okay, this is when I need to do my actual journals. Because if you remember the GL impact of the invoice, it deferred the entire amount of the invoice into my deferral account. over time, I want NetSuite, and NetSuite ARM will do it for me. And excuse me, this is just a pop-up. Will generate a revenue plan for me based on everything that it consumed. So it knew the rule to follow, which was my 12-month recognition rule, and it generated this planned revenue schedule. So it knows that starting in February 2021, I'm going to recognize $12,147.69. It's going to move it out of that deferral account and move it into my target income account, which is defined on the item itself. Over time, your revenue manager can come back to this plan and see the journals and when it was actually posted. So this will lead you back to the journal that actually had this GL impact. And I can see all 12 periods going into the future. So great tool for those that might still be on NetSuite and using the old legacy revenue recognition. You had this schedule, but I have much greater control. I have a discrete record now versus something that is attached to the sales order. And if I need to make any adjustments to the contract on the fly, I don't have to like stop the transaction, rebuild it, or do other scenarios that, you know, back in the old days that you had to. So much greater control, 606 compliant, which is very important for a lot of software and SaaS companies out there, especially if they're offering support. Speak with your auditor for information about your level of compliance and needs. But NetSuite has done a great job making sure that it's become a leader in this scenario. One thing before I pass it over to Jeff to bring up, in that approval process of the sales order, I have other clients, and this is another integration point that you could consider, is if you have a external license manager that you're running to provision this software, you could have it then NetSuite communicate to your license manager to say, please provision this client 12-month, this product, options ABC, whatever the case may be. And that information can also return to NetSuite in the form of like a fulfillment record or even a custom record, depending on if you want to store license information, license keys in NetSuite, if you need that kind of return trip information.